Okay, last part, and I want to add another part that I forgot to include on the second video. So for those where you see question marks, for those journal entries, where do you get those numbers? You get that from the inventory flow chart. So specifically in what part? On the cost of goods sold column. So for number 3, what are the numbers? Notice that we sold 900 units. So for those who wrote on the side, and this should make it easy, and you guys are able to, I think it was number 3. This should make it easier, so it's already pointed out for you, and you already know where to point. But if not, you just look at number 3, and you're like, okay, I sold 900 units. Here's the 900 units. How much in total? 18,000. That's the amount you're going to plot in for number 3 for COGS. COGS is cost of goods sold and abbreviated. So 18,000 here and 18,000 for inventory. Number 4, I might as well give you guys that one. So notice number 4 says 1,200 units were sold. So you're going to go back again to your inventory flow chart, and notice I wrote number 4, and here's the amount that I sold. And what is the total end amount? It's under total cost of goods sold, 27,000. You're going to plot that under COGS, 27,000, and 27,000 on inventory. So once you're done with all 14 journal entries, that's why I didn't do them all, because they're repetitive. There's no other different journal entry. Once you're done with your journal entries, then you have to do T accounts, and it's just only 2 for FIFO. If you're doing all 3, that means there's 4 T accounts that you have to do. But this is based on my understanding is that he verbally gave directions in class, so follow that. If you didn't know, that's because you probably didn't pay attention. So anyway, so for FIFO, you're making 2 T accounts. You're going to make the sales, there we go, sales T account and the COGS T account. Ignore those numbers. That's just something, this is another problem, so ignore that. That's not the answer. So when you have all 14, you're going to pick all the journal entries that have sales in it. And notice that sales is on the credit side. So it's, in this case, number 3, 45,000 is going to be on the credit side on the T account. So you're going to put 45,000 there. Ignore those numbers. Those are not right. Then number 4, here's another sales. So you see 60,000 on the credit side. You're going to plot it here. And then you're just going to keep, picking out of all the 14 journal entries, wherever it says sales, you're going to plot in on your T accounts. Once you picked all those, add them up, and that's the end result. Then the same thing goes for COGS. You're going to pick all the COGS in your 14 journal entries, and notice they're going to be on the debit side. And I think this was 18,000, so it's going to be 18,000, and you're going to put it on the debit side over here. Ignore those numbers. Those are not it either. So 18,000, and then the other one, I think this was 27,000, so 27,000 on the debit side. Plot it in here. Add all the COGS you have from your journal entries, add them up, and that's your end result. You need those numbers because those end amounts on your T accounts are needed to do this last part, gross profit. So you're going to plot in all your sales that you know from your T account, and the end result for the T account on COGS. So this is just an example. How do you do gross profit? He did the favor for you. So right here is giving you the hint that you have to subtract. Excuse me. So this is an example. Let's say I ended up with my T account 100,000 on my credit side. You're going to put 100,000 there, and 30,000 on my debit side. You're going to put 30,000 there. 100,000 minus 30,000 gives me the gross profit of 70,000, and that's it.